Welcome to the Knakal News Network. The Knakal News Network is brought to you by the Knakal Group, Cushman and Wakefield's #1 investment sales team in New York City.
Hi, I'm Jon Hageman, partner in the Knakal Group. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, chairman of New York Investment Sales for Cushman and Wakefield. And today we're going to talk about the 2015 investment sales market. Bob, so the numbers are in for 2015. Tell us what we saw.
Hags, 2015 was a great year. And on the heels of 2014, we've just been through the two best back-to-back years that I've ever seen in the 32 years I've been selling buildings here in the city. Much better than 86 and 87, better than 98, better than 07. It really has been remarkable what's been going on in the investment sales market.
So Bob, let's pick one. Let's talk about dollar volume.
Well, Hags, that's the metric that most people focus on. Last year, we had $74.5 billion of investment sales volume, which exceeded the previous record of $62.2 billion set in 2007 by 20%. And we were almost 28% higher than the $57 billion and change that we had in 2014. So all-time record by a wide margin last year in terms of dollar volume. With regard to the number of properties sold, 5,083 properties sold last year. That was down about 8% from what we had the prior year. You know, our estimate was that the number of properties sold was going to be down 10 to 15% last year, so we were pleasantly surprised by the 8% reduction.
Now, Bob, what about values? How did they perform in 2015?
In 2015, we hit a new all-time record. Citywide, the average price per square foot was almost $550 per square foot if we blend all product types together.
In the end of the year, particularly in the fourth quarter, these numbers started to adjust a little bit. Can you tell us what we saw then?
Hags, that's a very important thing to look at because the investment sales market did start to show some signs of cracking towards the end of last year. And while you look at the year as a whole, these numbers all look fantastic. But what we saw, particularly on the value side, was that if you look at changes quarter by quarter, we saw that we had a couple of quarters of price per square foot actually dropping. First time that's happened in 19 quarters. And we also saw cap rates start to expand for the first time in 19 quarters for 2 quarters in a row. So that was something that was of great concern and is impacting our outlook on 2016.
So Bob, adjusting our outlook for 2016, what are your main concerns going into this year?
Main concerns are that we might be in a transitional year in 2016. We've seen some softness in the land market in the city. We've seen the hotel market face some challenges. Other product types are hanging in there okay. But it's been very, very difficult to forecast the 2016 investment sales market. In fact, probably the most difficult time we've had going back to 1998. But where we're headed in 2016 would be a great topic for our next episode. So why don't we leave it here and we'll get into that next week. So in summary, 2015 was a fantastic year in the New York City investment sales market. We hit an all-time record in terms of dollar volume with $74.5 billion, far surpassing the previous record in 2007. The number of buildings sold wasn't quite the record we had in 2014, but still was a banner year with over 5,000 transactions in the city. Also in 2015, we saw property values across every product type in every geographic submarket hit new all-time records.
Thank you for joining us today. Tune in next week for another episode of the Knakal News Network.